Hey traders, John Howell here. Listen, I want to go over this interview that was happened that actually did a few months ago with Tudor Jones, and what he says is coming in the second and third quarter will blow you away about what's coming. Also about his thoughts on the crypto market, what he thinks about the crypto market, what's likely to happen as these unfold. And there's so much more about the deficits and so much more about what's coming. And you'd be quite surprised. There's something that he says here that just took me by surprise, and why it's gonna and how we and by him saying what he's saying, I'm also going to interject in about what sort of investments we can look for to do really well. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, over the last 15 years, we've tested 64 different trading courses, and we have put the most powerful systems and trading techniques that we've discovered in this brand new trading course. And for a limited time, I'm giving away free access. So go to johnsfreegift.com. That's johnsfreegift.com, or click on the very first link in the description to get free access to this brand new trading course right now.
My pleasure to bring to you an exclusive conversation with Paul Tudor Jones, the CIO of Tudor Investment Corporation. Paul is also the co-founder and chairman of Just Capital, and he's the co-founder and a board member of the Robinhood Foundation. Paul, it is such a pleasure to have you join me today.
It's great to be with you, Julia. You're the nicest person on Wall Street.
Well, I appreciate that, and our viewers are obviously grateful to hear from you. So let's kind of start big picture here. Obviously, 2020 has been a year like we've never seen from the global pandemic, the sell-off in March, the historic fiscal.
Now again, guys, this was done, I think, in either November or December last year, so it's still pretty relevant right now.
And monetary responses that we saw. The election, now a runoff in the state of Georgia, markets hitting all-time highs or new highs, and of course the vaccine news, the light at the end of the tunnel. So kind of framing up all of that, I know it's a lot to digest. What are your views of the market and also the broader economy?
Well, I think the stock market's on a combination of fiscal and monetary pulse that we've never seen before in history. Nothing like this. And of course, that's why you've got more companies with a PE over 100 than at any point, any other time in history. I think we're something like 50% more than we had in the top of the 2000 Nasdaq bubble. But there's, again, if you just compare and contrast, in 2000, we had real rates of about 250 basis points. We had nominal rates near 6%, and yet you still were able to achieve these lofty valuations for a variety of companies. Fast forward to where we are now, you've got real rates that are negative 200 basis points, nominal rates 0, and again, you can see why you've got Tesla at 900 times earnings, because of the fact there's really no real good alternative for your cash. And so what we're seeing is what you see normally in many post-election years, a redeployment of cash back into risky assets after the fears that are associated with presidential elections and change in parties and the uncertainty and then knowing after they go away, irrespective a lot of times of even what the fundamentals are, risk capital comes back in the markets, and that's kind of what we're seeing now. And I assume that trend is going to continue.
So Paul Tudor Jones, he was saying just there that obviously the risk capital has come back in, and if you actually bring up the S&P 500, in fact, let me actually do this right now. Let me bring up the charting software, and I'll bring up the S&P 500. You would notice, look at this here on the S&P 500. You would notice how the spike in volume, not there. It's was it the S&P 500, the Dow Jones? It was one of those that let me have a look at this weekly situation here. Oh no, it's actually not. No, forget about that. It must have been another market. But anyway, let me get back to this here. So, what Paul Tudor Jones is obviously saying is that there's a lot of now riskier the money because of the situation, because 0% interest rates. And there's excuse me, And there's no other area there's nowhere for these big hedge funds, right? Because like even to buy bonds these days is would be useless. So a lot of this risk capital, as Paul Tudor Jones, is coming back in the markets, and that's the reason why the markets are so high. Now, yes, the markets are in bubble territory, as Paul Tudor Jones was saying. But with the whole printing of money and the stimulus and all that sort of stuff that's going into the markets, we can see a hockey stick movement just like we did in 99. Now, if in 99, as Paul Tudor Jones was saying, 99 was nothing to compare to what we're doing right now, meaning there is, I think it was saying interest rates around 6%. Right now, there's so much more stimulus than there were back in 99, and right now there's so much more people hopping in the market because there's 0% interest rate, because they're trying to chase a yield and they're trying to chase a nice return. So based on what I've just seen from Paul Tudor Jones, I wouldn't be too surprised to see this year being a hockey stick year in the markets. And yes, we're in a bubble territory, and yes, this thing has gone absolutely just crazy. But the problem with bubbles, right? You just never know where they're going to end. So that's what I think. Anyway, that's what I think about what he just said there. Anyway, guys, leave a comment below. Let me know what you think about what I just said.
Well, I'm hearing you on that, and the surge that we've seen in risk assets. Certainly, I know you more as a macro trader, not necessarily an investor. You look at things from a trader's perspective. Are there any events on your radar, anything that could really change things or drive things in 2021?
Well, there's some things that I think are immutable, and then there's some things that are going to be very binary. It's funny, I'm actually speaking from Georgia right now. So I know this in Georgia. I think anyone that thinks that this election is forecastable is just wrong. So I think the Senate is a 50-50 toss-up. You've got 5 million voters, I believe, in Georgia that voted. That number is going to probably drop to 3 million. Or it should drop significantly from the general election. That's what runoffs typically do. It's going to be about who mobilizes their base. And you got this brand new phenomena of mail-in voting, which clearly favors the Democratic Party. It takes 10 minutes to go ahead and fill out a ballot and mail it in, whereas most Republicans go to the polls, and what's that, 2 hours? So even though I think you would look at the numbers, you would think the Republicans have an advantage in this, there's just a lot of unknown events around this runoff. And so I think it's a coin toss, and yes, the outcome of that will have a lot of binary consequences, because we're back to it's going to be all or nothing. You're either going to have 2 blue senators, you're going to have 2 red senators, and they'll have significant consequences for some assets. So yes, that part I think is indeterminate. But then I think there are other things that aren't indeterminate. And that's, we're going to have a vaccine. The vaccine's going to bring us back. We're going to have an incredible growth rebound. I have 4 kids in their 20s, and it's like a horse at the beginning of a race. They're so ready to get to see their friends, to get to restaurants, to vacate. They're just ready to get out and go crazy, like I think everyone else in the world. And yeah, I assume you're going to have a second quarter explosion, certainly at the retail level, at every level, and you're going to have this just massive boom. And the consequences of that, I think, are pretty clear for fixed income. Fixed income will probably go down during that. Commodities will probably go up. And I think those are the 2 things that seem to me to be not influenced by what happens here in Georgia in January. Maybe there'll be an accelerant if you had a blue wave as opposed to a red wave. But I think we pretty much charted the course to some type of absolute supersonic boom come second and third of Q2 and Q3 next year.
So Paul Tudor Jones was saying right there, and as you can see, right, from what he's saying. Now, guys, this is not me saying it. This is what he's saying it. And guys, what you want to think about with Paul Tudor Jones is he's seen so much activity and so many booms and bust cycles, and he's studied history. So we really can respect and appreciate what he's saying here. That comes second quarter of this year now, because this was just before the end of last year, come second quarter of this year and the third quarter, we can see an absolute supersonic boom across that. So if what he's saying is true, firstly, he was saying, look out for commodities. Commodities are probably going to rise. Inflation is going to come back. So therefore it's probably going to be bullish for gold and silver as well too. The miners, and also commodities. So we're probably likely to or continue to see rising in commodities. Oil's been going through the roof already, but things like soybeans, corn, wheat, pork bellies, stuff like this, right? Different commodities are probably likely to go through a massive boom. I believe we're creating some form of a bottom for the last 12 months in the commodity sector, especially things like in soybeans and corns and stuff like that I've been watching. They could present a really good opportunity this year. And obviously what he said there, right, from a retail perspective, we're likely to see a massive supersonic boom from a retail perspective. So with your investing opportunities or your trading, basically your investing opportunities, what you want to do is right now is the time to do your homework and do your study and do your research across all the different retail stocks out there and see which stocks haven't really made big moves yet. I know a lot of stocks have, like McDonald's. McDonald's was a perfect buy, but So what you want to do is you want to keep an eye out for that. That's where I believe a lot of the growth is going to happen, especially when we start to really, really pick up there. But also, I do believe, based on what we're seeing here, and because of the stimulus that's happened right now, that's as Paul Tudor Jones said, we're going to see a supersonic boom, but that was before this extra $600 stimulus that actually came out recently, and then now another $1,400 stimulus. All this is now backed up, and that's just going to cause so much more inflation because the velocity of money is going to pick up massively. Inflation is going to pick up massively, and for the short term, you're going to see things just go through the roof, right? Supersonic boom. That's going to cause, again, commodities, gold, silver, the mining stocks, I believe, as well too. All these things to start to make really, really, really big moves. That's what I think about that, guys. Let me know what you think in the chat box below.
Irrespective of how Georgia goes, it sounds like.
Yeah, I think again, if the Democrats won, they're going to try another infrastructure bill. So you'd probably accelerate that growth path a bit. If they don't win, I think the vaccine by itself will again unleash so much pent-up demand that you're going to really see a lot of growth in the second, third quarters, and you're going to see commodity prices probably rally, see inflation come back. There'll be a whole suite of things that I think are pretty much baked in the cake.
Can we talk about inflation for a sec? I know you wrote this letter back in May, and I will preface it. I know you're not a flag bearer for Bitcoin by any means, but you did have a fascinating thesis. Would love to kind of get an update on that, especially at current levels, and how you're thinking about the cryptocurrency in the context of your portfolio.
Again, I'm not an expert on Bitcoin by any stretch. It's just with a market cap of 500 billion, it's the wrong market cap in a world where you've got $90 trillion worth of equity market cap, and God knows how many trillions of fiat currency, et cetera. So it's the wrong market cap, for instance, relative to gold, which is 8 or 9 trillion. The Bitcoin reminds me so much of the internet stocks of 1999, because the internet was in its infancy. No one knew how to value it because of the world of possibility that lay ahead. What you can be certain of is that probably 20 years from now, our kids and grandkids, whatever, all of us will be using some type of digital currency. Digital currency will be will be used by every sovereign. They may have their own digital currency, whatever. They'll be very, very, very commonplace at that point in time. Cash may be gone. And so in that world, where does Bitcoin fit in? As well as some of the other cryptocurrencies? Where does Ethereum or Tether? I don't know. I'm not smart enough to figure that out. I think that Bitcoin, if I really had to kind of guess what the future is going to be, it's going to be a lot like the metals complex, where you have precious crypto. That might be Bitcoin. It's the first crypto, first mover in a world that's so compressed. It has that historical integrity within digital currencies that it will always have. So that might, and again, because of its finite supply, that might be the precious crypto. Then you're going to have transactional cryptocurrencies along with the sovereigns, and they may be more like the industrial metals. So where you have gold as a precious metal, and then you've got copper and platinum and palladium, et cetera, that are industrial, lead, aluminum, industrial metals. You may have precious crypto and you may have industrial crypto. So what I do know is that it's no way possible today to know what the next 10 or 20 years are going to be like. And I know that if I had to again take a position on it, I'm gonna take the brand name, which is Bitcoin. I'm going to assume that it's the wrong price for the possibilities that it has, and I'm going to assume that the path forward from here is north. And again, we had no idea in '99 of how the internet was going to sort out. And there were some companies that obviously, if you owned in '99, despite the crash that came after that, did just incredibly well and ended up becoming dominant players in the world. My guess is that's what we're going to sort through, that kind of crazy competition, winners and losers, et cetera, in the digital world. You're going to see sovereigns fight back against private cryptocurrencies along the way, the same way 110 years ago, 100 years ago, it was funny, they had gold is really the reserve currency of the world at that point in time. We were actually on the gold standard because of its neutrality. And then, of course, we came off, they banned it, but it had appeal, it had allure, because it was the one thing that was constant when fiat currency is, as we've seen, my Lord, when you think about the geopolitical shakeup in the past 20 years, it's hard to understand what the future of a currency, any particular currency, is going to be. So again, I think crypto is going to have a crazy rocket ship ride up and down along the way. But my guess is that something like, or Bitcoin in particular, will be substantially higher 20 years from now than where it is right now. And who knows what role it has in the monetary system.
Yeah, it's a fascinating thesis you just laid out there. I do want to shift topics, and I want to talk about...
So for you guys that follow Bitcoin and investing in the Bitcoin right now, as Paul Tudor Jones was saying, right, firstly, the very last point I want to bring there is that you're going to see a crazy rocket ship up and a crazy rocket ship down. And if crypto may be referred to like gold was, and then you're going to have these other different cryptos that are going to be like, the different other commodities that are used in the marketplace. Interesting to see what you guys think about that. I know Ethereum is definitely up there. And also Bitcoin, they seem to be fighting it out there on some of the top cryptos. But let me know what you think in the chat box below. Do you actually think that the Bitcoin will actually eventually become a currency or be using that, or is it something else? Or do you think it's just going to be really interesting? Again, I don't know how it's going to plan out. when it comes to that. I personally do believe that you can just see it by history, right? We are going to a cashless society, and we will go to a digital currency real soon, as Paul Tudor Jones just said that, and I totally agree with him on that. And so let me know what you think in the chat box below. Do you think it's going to be Bitcoin that's going to be the digital currency, or do you think the government's going to start to create their own, or do you think different countries are going to have their own different digital currency? Let me know what you think in the chat box below.
Wealth inequality in this country and capitalism, and of course stakeholder capitalism, something I know that you care very deeply about. So kind of just stepping back again and looking big picture, we've certainly seen markets just rip, and we wonder, what does that do, and how does that exacerbate the wealth inequality in this country, and what do you think needs to be done to flatten the curve, if you will, of growing inequality?
Well, we've obviously got this huge disconnect between Main Street and Wall Street, and there's so many data points along us. I mean, we've since July, I think we have 8 million more people in poverty than we had just in the last 6 months, despite the recovery that we've had. Those that are the most vulnerable have suffered the most, and until we get the vaccine, we'll probably continue along that path. So, listen, the private economy is 20 trillion, and then the government's 4.5 trillion, and then public philanthropy is probably 350, 400 billion. So private philanthropy, so the corporate sector, the private sector's 40 times the size of philanthropy, and it's 4.5 times the size of the U.S. government. So if we're going to have true social change, it has to start in the private sector. That's where you're going, I think, to actually begin to deal with wealth inequality. Of course, at Just Capital, we poll every year and ask the Americans, what's the most important thing to corporate justness towards making a company good? And the answer comes back year after year after year. Number one thing is, do you pay a fair and living wage? Do you pay someone a wage that allows them with a partner to raise a child and not struggle but thrive, not strive but thrive? So I think we've labored under this. I think it's a false god and a false belief that we have to pay low wages in order for companies to survive and to prosper. I think actually if you raise the wage level across all workers, it's quite possible that the whole pie gets bigger and that we have the same level of profitability for companies, but we have a much stronger and more productive economy than what we have now. So we started this initiative called the Financial Wellness Audit, which we're encouraging companies to do. And here's a statistic that I don't think everyone really knows, which is of the 20 million workers for the 1,000 largest companies in the United States, 10 million of those do not make an income with their partner working part-time to be able to support a living wage for a family of 3. And that just, again, I don't think that's really what the American dream's about. So one thing we're encouraging companies to do is do a financial wellness audit, find out how many of your employees are making below a living wage. And then when it comes time every year to allocate the revenues, how much of corporate revenues should go towards dealing with employees that you have making less than a living wage versus how much should be allocated to shareholders. And that's a really, I think, important moral question that every board should deal with, that every shareholder should deal with, which is, if I'm not paying someone a living wage, and certainly if I'm not paying them a poverty wage, which would be a subset of that 10 million number, probably 3 million number, probably 3 million to 20, then who is paying for that? Well, who's paying for it, Julia, is you and I, taxpayers. Companies are actually using taxpayer subsidies to be able to generate their own profitability. And again, there's a large question as to whether that's either good economic policy and whether that's really morally correct. So I think the first most important thing is for everyone to know how many of your employees don't make a living wage, and then what's your responsibility to them along those lines. I think it's a great question for every board, every person in senior management. Aren't our workers who are actually allowing us to provide these products and services, aren't they the most important lifeblood?
Paul, I'm a millennial, and you were mentioning you're a father of millennial age children as well, and our views. Broadly speaking, as a generation, I'm sure you've seen the polls on the views of capitalism. And I do want to kind of ask you about the consequences. And the reason I wanted to have this conversation, it goes back to a TED Talk you gave 5 years ago. And if you don't mind, I'm just going to quote you really quickly. You said, quote, "Now here's a macro forecast that's easy to make, and that the gap between the wealthiest and the poorest, it will get closed. History always does it. It typically happens in one of three ways, either through revolution, higher taxes, or wars. None of those are on my bucket list." What is your macro forecast for that today? And are we headed in the right direction?
Well, this election obviously was it looked like we were at one point along the way for a revolution. Who knows what's happening with the election? And certainly the stuff that we saw on the streets this summer was unlike anything that we've seen since the late 60s. And then, of course, if you look at the Biden tax plan, which for all we know, come January 6th, may ultimately get enacted. And the Biden tax plan takes an absolute dead-eye bullseye on the 1%, and does a great job of redistributing that to the rest of Main Street. So I don't know what the economic consequences are. I know what the distributed properties of it are. So we could be along that path of high taxes. We won't know until January. And then as far as wars go, again, these are crazy times where politicians seem to be jumpy, where things seem to be so discombobulated that who knows what the future brings. And again, a war can be a consequence of a variety of things. It's possible a war could be a consequence because there's so much divisiveness at home. It's the easiest way for whoever the politician in charge is to get people to look the other direction. So I still think, again, that gap's going to be closed. It's probably going to be one of those three avenues. Which one, I can't pick. If I had to put my money on one, well, look, we're 50-50 on higher taxes. So that could literally be, well, we'll know more in January.
Mm-hmm. Can we kind of double click on that just a little bit? I just kind of philosophically, how do you think about the deficit and higher taxes?
Deficit? Who ever talks about that anymore? I mean, it's funny. I haven't heard the word deficit. The only time I hear the word deficits when I talk to all my macro brethren who simply will sit there and say, it's just a matter of time before we pay the piper for the egregious debt levels that we built up nationally as well as internationally. So far, though, it seems like the trees can go to the sky, that there is no limit. Certainly, debt to GDP globally continues to make new highs year after year after year. And now we've given up even trying, I think, to have any semblance of fiscal responsibility in terms of tackling it. So at some point, I guess the markets will find there'll be some weak point, there'll be some grease of the future that creates enough systemic shock to where governments will have to deal with austerity budgets. I don't know when that's going to be. We've been on this path literally for 3 decades, and it continues to do more than I thought was even remotely possible in terms of people's tolerance for fiscal impropriety.
So, obviously, we're going to finish up with the Paul Tudor Jones interview there, but the big things that I want to drive home of what Paul was saying there was the really interesting thing is that, you know, a few things there. Firstly, you know, I believe they're just going to keep pushing and pushing and pushing this market as much as possible. But within that, within all that, they are creating one big massive bubble. And as Paul was saying, and I truly believe that within big bubbles, there's big crashes. And I believe over the next, say, year or two, maybe the next couple of years, I don't know. But wherever the top is in the markets, we're going to see one of the biggest crashes of our lifetime. That's after the bubble. I believe we've just started the sort of the melt up sort of phase, the blow off top, the hockey stick, whatever you want to call it, right now in a lot of the markets. I believe this year is probably going to be a big year. And then, I don't know, maybe at the end of this year, that's when something happens to the markets. I don't know. Generally, the crash periods generally happen around the September, October period. But for now, it looks like the markets just want to keep going up and up and up with what's going on right now. We are in a blow-off top, but I do believe there is going to be one big massive crash coming. But firstly, the bubble is probably going to get a lot larger for that to happen. So anyway, guys, that's what I see there. I really want to share that with you and what I thought. Leave a comment in the comment section below and let me know what you think about today's video.
Paul Tudor Jones